Hey everyone, welcome back to Corporate Decoder, the place where we spill the tea on corporate filings and find out if companies are actually doing as well as they say they are. Today we are diving into some exciting news from iBio Incorporated. Buckle up because this filing, while not a full financial report, reveals a significant move that could set the company on a new course. And hey, if you love getting these unfiltered insights, make sure you are subscribed and join our Discord community, linked in the description below. We're looking at a Form 8K filing from the 8th of January 2026, and the big news is iBio Incorporated secured a deal with a group of institutional investors, which they're calling a private placement. This isn't something you see every day, and it tells us a story about how the company plans to fund its future. So what exactly happened? iBio entered into what is called a securities purchase agreement. Think of it as a handshake deal to sell a bunch of their company stock, or what they call common stock, to these investors. They're not just selling existing shares though, they're also offering these things called pre-funded warrants. We'll get into what those are in a bit. But essentially they are like a promise to sell shares later. They're looking to sell over 1.4 million shares, and they could sell even more if these pre-funded warrants get used. The price tag for each share is $2.35. Now, the pre-funded warrants are a bit more complicated in their pricing. You pay $2.349 for one, which is just a tiny bit less than a share, and then you pay a very small amount. Like $0.001 to actually get the share later. It's a way for investors to get in now, but delay the actual purchase of the stock itself, which can have some tax or regulatory benefits for them. This deal is expected to wrap up pretty quickly around the 13th of January 2026, and the payday for iBio is significant. They are looking at bringing in about $26 million, all before they pay off any fees to the people who helped make this deal happen, like investment bankers. So what's the money for? iBio isn't just going to put it in the bank. They plan to use this cash to push forward with their early stage research, specifically for conditions related to the heart and metabolism, like their iBio 610 and iBio 600 programs. They also want to continue developing other early stage drug candidates, and whatever is left over will go towards their general business operations and working capital. It shows they have a clear plan for this funding. Let's circle back to those pre-funded warrants. They come with some rules. A big one is that investors can't exercise them if it would make them own more than a certain percentage of the company's stock, usually capped at 4.99% or 9.99%. This prevents any single investor from suddenly owning a huge chunk of the company through these warrants and potentially causing a massive shift in control. They can also choose to exercise them without paying cash, if, for some reason, they cannot get the shares registered properly. This deal also puts some limits on what iBio can do for a while. They can't just go out and issue more stock or make big changes to their company structure, like a reverse stock split for about 60 days after the deal closes, or until a separate registration process is completed. This gives the investors who just bought shares a bit of breathing room and predictability. It's also worth noting who helped broker this deal. Leerink Partners LLC was the main agent, with LifeCI Capital LLC and Oppenheimer & Company Inc. also playing key roles. These are the financial professionals who connect companies with investors for these types of private placements. On top of the purchase agreement, iBio also signed a registration rights agreement. This is pretty standard for these deals. It basically means iBio promises to file the necessary paperwork with the Securities and Exchange Commission, or SEC, to allow these investors to eventually sell the shares and warrant shares they just bought. They have to get this done pretty quickly, within 60 days of the deal closing, and they need to keep that registration statement active so investors can sell their shares without issue. This agreement also includes what are called indemnification clauses. Basically, if something goes wrong with the registration, either iBio or the investors might have to stand behind the other party and cover potential losses. It is a way to protect everyone involved when dealing with complex securities regulations. Now, this next part is important for how this deal was structured. iBio is saying that these shares are being sold without being officially registered with the SEC. They're relying on certain exceptions, like Regulation D, which is a set of rules that allows companies to raise capital from a select group of sophisticated investors without the full public registration process. The investors involved have to prove they are accredited, meaning they meet certain income or net worth requirements, and that they are buying these shares for investment purposes, not to flip them immediately. This avoids a public offering and the associated public advertising. To get the word out, iBio also put out a press release on the 9th of January 2026 announcing the pricing of this private placement. This press release is part of the filing, and it is how they communicate this important news to the public. As with any company filing, there is a section on forward-looking statements. This is basically a company's way of saying, look, we're excited about the future, but things could change, and what we say today might not always be true. They use words like anticipates, believes, expects, and projects to talk about future plans, like the expected proceeds from this placement, and when they think it will close. They're also reminding everyone that real-world results can differ due to various risks and uncertainties, and they point to their other SEC filings for more details on those risks. Finally, the filing lists the exhibits. These are the actual documents that make up the agreements, like the form of the pre-funded warrant itself, the securities purchase agreement, and the registration rights agreement. These are the legal documents that spell out all the details of this transaction. So, what does this all mean for iBio? This private placement is a significant capital infusion. It shows that institutional investors are willing to put substantial money into the company at a specific valuation. The key here is that iBio is using this money to advance its drug development pipeline, which is the core of its business. They are essentially powering up their research and development efforts. The fact that they are using unregistered shares under Regulation D tells us they aimed for speed and efficiency in raising this capital, targeting investors who are familiar with these types of direct investments and can handle the regulatory nuances, the limitations placed on the company and the investors through the agreements. Like the beneficial ownership limitations on the warrants and the restrictions on issuing new stock are all standard risk mitigation tools in these deals. This isn't just a financial transaction, it is a strategic move to fund specific growth initiatives. Looking at this, iBio is clearly betting G on its preclinical programs. The success of this private placement injects much needed cash to move these projects forward. The main risk is execution. Can they hit those development milestones they've outlined? If their research doesn't pan out, this capital won't be enough to carry them indefinitely. On the flip side, if one of these preclinical candidates shows strong promise, the value generated could far outweigh the cost of this offering. The company's direction seems to be leaning heavily into its biotech innovation, and this funding is the fuel. In conclusion, this filing is a clear signal that iBio is actively pursuing strategic financing to push its science forward. It's a vote of confidence from investors, but the true test will be in the results of their drug development programs. Keep an eye on their progress. Alright, that is our breakdown of iBio's latest filing. What is your take on this private placement and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.